Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, moving into this week, we've got a whole raft of key economic data that I believe is going to be key for your movements in your markets. Now, the Fed meeting last week, the statement that it put out suggests that the Fed is moving towards a potential rate hike in December. But that is a big but still, because there's a lot of economic data between now and then, and the Fed still remains data dependent. And the back end of last week, we had growth figures, we had inflation data for the PCE, both disappointing, and what you did see is the expectations start to come back a little bit from that Fed rate hike. So we had the move back after the Fed meeting up around about 50% on the probability stats. Now for CME Group FedWatch, that probability is now back around 46%. So we are still data dependent on this move as to whether I think the Fed's going to hike in December. And that would suggest keeping an eye on the data, because it's going to be really important as to exactly which way I think the markets will be following this one. Certainly at the moment, Thursday and Friday, on the back of those two data points, major data points out of the States, we had the dollar starting to weaken again a little bit. So through into this week, we've got the crucial PMI data, the ISM manufacturing, but also the ISM services, ISM non-manufacturing, and also finishing off the week with payrolls data. So lots and lots to drive this dollar around all week, and I think it's going to be another volatile one. So you've also got the central bank meetings from Australia and the UK as well, the RBA and the Bank of England, both announcing monetary policy this week. We could still see a Reserve Bank of Australia rate cut this week, because you've got the continued slide in the Australian economic data, but also coupled with the slide in Chinese data as well. So some factors there driving a potential rate cut in Australia. And we could also see some interesting moves on the Bank of England, because we've got Super Thursday this week, where you've got the minutes, you've also got the quarterly inflation report, and obviously the monetary policy statement, all at the same time, all coming out. So we're looking out for possible changes in the voting makeup on the MPC, perhaps more hawks coming out of the woodwork. So we'll see how that one goes. So certainly I think cable could be another mover on this data on Thursday. So how is that all sort of playing into sort of the markets? Well, forex has certainly been a bit volatile recently since the FOMC. Euro dollar breaking back strongly below that pivot level at 110.50 to 111, and that is again now trading below that pivot. It starts to become a resistance again, and that's what we've seen in the last few days. Again, the resistance starting to come back in on Monday. So that is your level, that is your resistance that you need to see euro dollar through to start pushing higher again, 110.50 to 111. Cable has had a strong run higher. Not only did it have a strong run higher on the PCE data on Friday, but also this morning on the UK manufacturing PMI, which came in strongly ahead of expectations. That means that cable is pushing on towards the 155.10 resistance. That is your big near-term resistance that you need to see cable breaking through in order to open the upside once again. Dollar yen is a bit of a quiet one at the moment. It's still stuck fairly range bound, actually, sort of 120.15 up towards 121.50. So still in that little bit of a range, and it's just sort of playing around, not really sure how to play the outlook at the moment. But the pivot level in that band between 118 to 121.70 comes in at 119.60, and I think that is your key near-term level. The Aussie and the Kiwi have both been under a little bit of pressure recently, but the Aussie sort of falling back below 72 figure, I think, is a key level. That needs to be broken to the upside to regain a bit of upside momentum. But the Kiwi also needs to hold on to the support at 66.15. So looking out for the indices, well, we've had some strong runs higher, some really impressive gains throughout October. Now the big question is, can that momentum be maintained moving into November? Because we've had such a strong move, you could start to see some profit taking coming through. So you've seen the likes of the DAX breaking up above 10,850. Now that opens up the next resistance above 11,000. We've got resistance coming in around about 11,240 area, and then up towards possibly the reaction higher around 11,438. So some upside levels there, but you need to hold above that 11,850 mark. That is your breakout level on the DAX. Looks like it could well do it on Monday. In terms of the S&P 500, again, very strong moves, higher lows, higher highs, pushing on, looking at the resistance above 2100 now. So you're looking at the resistance not too far away, but certainly it's had a strong run. Again, profit taking could start to come into the equation. For the FTSE 100, it's the laggard. It's so disappointing. It's the commodities that are being the big drag on the FTSE 100. And again, that's the strong dollar play, which is not helping the FTSE in this regard. But the FTSE needs to hold above the support at 6,400. 6,400 area. So we're looking out for also the gold price, which has been on the slide, big sliding back in the gold price in recent weeks, and we're now back below $1,140. So you see that continued slide. It looks like it's going to be closing below support at 1136.50, and that would open the floor of an uptrend channel, which comes in around 1120, but possibly even move back towards the support at $1,104 if this momentum continues to decline. Now, in terms of the oil price, they are still under pressure. Again, we're looking out for the floors on these big ranges to remain intact. On WTI, it's 43.20. On the Brent crude, it's $46. Those are key levels, really, really important levels that we need to hold on to on the oil price. Otherwise, we're going to start to look really corrective, I think, in terms of the sentiment. Okay, so what about we're looking out for the rest of the week? Well, as I said, we've got the PMI data, or we've had the PMI data through the morning on Monday. Now we're looking out for the ISM manufacturing data. If that goes below 50, I think that could put the dollar under some corrective pressure. So watch out for a 4 handle on that number today. That happens. Then in tomorrow morning, we've got early doors. We've got the RBA monetary policy decision. Sort of looking on the balance, maybe a possible rate cut, maybe not. It's difficult to say at this stage, but the market isn't forecasting a rate cut, but still that is possible. Even if it doesn't cut rates, it could well have a sort of a fairly dovish stance in the statement. And then on Wednesday, we're looking out for the service sector PMIs all throughout the world. Thursday, we've got the Bank of England meeting and obviously the quarterly inflation report and the minutes. And then the big one coming out on Friday, we've got payrolls. Now, payrolls are forecast to come in around 180,000 at the moment, which would be an improvement on the 142 last month, but still not so great. Generally speaking, above 200,000 is considered to be sort of a decent positive number, but also we're looking past the headline number. Look at the average hourly earnings. We need to see average hourly earnings picking up. The inflation data in the US is not picking up. Can average hourly earnings start to pick up, which could potentially follow through ultimately into higher inflation? So watch out for the average hourly earnings. Also, the participation rate as well is an interesting one, along with the unemployment rate. So lots going on in that payrolls report on Friday. So I wish you good luck in your trading. I think it's going to be a volatile week. So I wish you good luck, and I'll speak to you the next time. Thank you.